Welcome to the Crypto Lab. My name is Sifu Wong, and today we are going to talk about a very interesting topic about leverage in trading. Now, for the next three video, I'm going to try something different. Instead of using my face, I'm going to using my avatar instead. So, do you like my cute avatar right here? Do please leave a comment in the comment section whether you like my avatar or whether you prefer to see my real face. What's up? What's up? Welcome back to the channel. Today we are diving into one of the most misunderstood topics in trading called leverage. Is it your best friend or your worst enemy, or maybe a bit of both? Stick around because I'm breaking down the pros, the cons, and the hidden risks of leverage that every trader needs to know before they blow up their account. Now, I'm going to break this down into a few sections. Section 1, we are going to talk about what is this leverage. So first, let's get on the same page. Leverage is essentially borrowing money from your broker or your exchange to control a larger position than what your actual capital allows. For example, let's say you have $1,000 and your broker offers a 10/1 leverage. That means you can trade $10,000 worth of assets. Sounds great, right? More money, more profits. Well, hold on. Let's dig deeper. Now, move on to section 2, the pros of leverage. Why do people love leverage? Personally, I love leverage because, number 1, it gives us a bigger profits. With more buying power, small market moves can give us significant returns. And number 2, capital efficiency. You don't need a huge account to trade larger positions. And number 3, accessibilities. It opened up the doors for traders who want to expose to markets like Forex, commodities, and indices, or even cryptocurrency without needing tens of thousands of dollars. Sounds like a win-win, but here's the catch. Let's move on to section 3, the cons of leverage. Leverage is a double-edged sword because it will bring bigger losses. Just like it multiplies profits, it multiplies losses too. If your trade goes against you, your broker or exchange can liquidate your position to cover losses. And also, on the psychological part, high leverage creates emotional trading. The swings are bigger, the panic kicks in faster. So, in short, leverage turns small market movements into big deals, for better or worse. Section 4. Let's talk about the real risk behind leverage. Now, here's the truth most people don't talk about. Leverage doesn't increase your edge, it just increases your exposure. A bad strategy with leverage, you'll lose faster. A good strategy with too much of leverage, you might still lose because of volatility wiping you out before your trade plays out. So the risk management becomes 10 times more important when you're using leverage. Stop losses, position sizing, discipline, all are non-negotiable. Now, should you use leverage? My honest advice, yep, you can use leverage, but however, start small, respect the power of leverage, focus on consistency before you crank up the risk. Most professional traders use low leverage and prioritize staying in the game long term over gambling on big wins. So, that's the truth about leverage in trading. It's a powerful tool, but with great power comes, yeah, you already know. If you found this helpful, smash the like button. Remember to subscribe to the channel for more trading insights and drop a comment below. What's your experience with leverage? Do you love it or hate it? So, if you're an adventurous trader like me, head on to the description area and sign up for your new BitUnix account where we offer up to 1 to 5 times of leverage on several coins. And send your user ID to my Telegram where I'm going to add you to the most profitable group on the internet. Thank you very much for watching. I'm going to see you in the next video.